All right, everybody. Thanks for joining us. Let's kick off our monthly production stream. This is the September issue. So, have the crew joining me. Most of the crew has been here before. You know them, but we do have a new face. Jackson Fryer. Thanks for joining us today.
Thanks for having me, Chris.
Yeah, Jackson covers our capital intelligence Wall Street side. Gage, long time. This is, I think you've been here since the beginning. Yeah, thanks for joining us, man. Julian, we didn't think you were going to be on this one, but you made it back. You were sick.
Yep, I was sick, but I'm good now for the webinar.
Yeah, well, I think we're all looking forward to being sick for the next week after sitting in this room with you. Appreciate it. Maria, covering production, thanks as always for joining us. And then Oren, always bringing it with the Nat Gas story. Thanks, Oren. All right. If you're not familiar with East Daley, what we do, simply we take amazing amounts of data and we simplify it to give you a look of volumes and supply from wellhead to demand. If you want to talk more about it, give us a call. Today's agenda, forecasts that move markets. So we're going to talk production, Permian power play. So a lot of talk about Permian production, especially on the crude side. We'll get into that. Gas egress, Oren's super excited about talking about that. That's a pretty powerful story. NGLs, Julian, you told me you're excited to see NGLs get moving again. I can't wait to talk and see what's going to make that happen. And then from a capital intelligence lens, there's a timing issue with sour gas, and we'll talk more about that. And then our call on production, and we'll get there. But first things first, and I want everybody to know what we have going on. We have a new partner, AI partner called Daley, and here's what this partner does. We have all our content fed through this partner. So if you want to search our content in an easy way that rolls it all together, that's where you go, right? So you have questions on production in certain areas or what type of infrastructure there is. That's where you go. If we've written on it, you can access it pretty quickly. So when you get the deck, the link to Daley will be in the deck. So you just click on this image right here and it will take you to it. So, all right, without further ado, let's jump into production. And Maria, what are we seeing this month?
So for this month, starting with crude oil, projecting an average for 2025 of 13.5 million barrels per day. And most of the month-over-month variations are driven by activity in the Bakken and Permian Basin. With WTI above $60, we continue to see that rigs decline, but they are starting to smooth out. Then switching to nat gas, we anticipate dry gas production to average 107 BCF per day. And the big three regions, which are Permian, Northeast, and Arctic, will continue to dominate the growth outlook. Lastly, looking at NGLs, we're forecasting 7.3 million barrels per day on average for 2025, and the Northeast is the key source of variation here.
All right. So even though we're -5 on the crude side, still a little bit different story. We're still seeing the Permian grow a bit.
Yeah, so to summarize, like price sensitivity continue to be a key variable across all commodities, and the Permian remains the central driver whenever you're talking about NGLs, oil, or gas. On the crude oil, as you were mentioning, Permian is the bigger driver, and rigs continue to decline, but at a slower pace. And the Delaware operator seems to be more resilient compared to the Midland. So that's what basically, as we start seeing the rigs smoothing out, we are seeing slightly higher production compared to last month. And then on nat gas, we think that tier 2 basins like the Anadarko and the Barnett will continue to help balance the market with added supply as some of their well metrics become more efficient. Finally, on NGLs, the Northeast is the main driver. Geopolitical trends and in-basin demand significantly influence the supply on this area. However, we do see it increasing, but talking to Julian, we have seen that they might shift down slightly next month. So, because we're seeing maintenance and explosions in the basin, so that could shift our outlook slightly.
Can you repeat that just so we think maybe next month we'll be down on NGL production in
Yeah,
the Northeast?
there's been some in-basin shift demand. I don't know if you want to.
Yeah, so Q2 we just saw really low flows on ATEX ethane pipeline. and the Monaca cracker pipeline. They had an issue Q2, and those flows nearly halved. So there's just a lot more rejection going on in the basin, which will translate to lower NGL production.
So October, we could see some big changes there.
Yes.
In what you're saying. And Gage, I want to bring you in. Thanks, Maria, on the Permian. Maria touched on rig declines are lower. Enterprise came out in their earnings call and said, "Hey, we'll probably see the smaller E&Ps reduce rig count at a greater rate than the larger E&Ps because they're more price sensitive." But I know you worked with the team and you did kind of a study looking at those rigs. It's just not happening right now.
It's not right now. I mean, you would think that would probably be the case. The larger producer, they're more resilient to the price sensitivities. But ultimately, what we're seeing is both larger and smaller E&Ps are decreasing the same, and that's about 14% across the board.
So we're seeing it kind of run the same. And then Maria, you said they're getting more efficient with their rigs, and we had a conversation earlier on this. But what does that mean? Getting more efficient with the rigs?
So basically, out of one rig, you can get more output because you have like multi-well pads or like higher IP rates on the regions that they're drilling. So their production outlook change without them having to add significant rigs.
I love this industry. Yeah, figure out a way. It's great. All right, let's jump into the stories, which is always the fun part. First, Gage, I'm going to bring you back on the crude infrastructure story. Some corridors are getting full here.
They are. So this month we thought it would be kind of fun and run a scenario, and ultimately what we did was we took our most recently published, in this case, that's our August production scenario tool, and the production there for 2024, the Permian crude oil production averaged about 6.4 million barrels a day, and we were forecasting this to grow about 4.5% year over year, and then an additional 4.7% through 2030. But we then made a high case, given all of the natural gas Permian pipelines that are being FID'd right now. And that high case then assumes that these new pipelines would reach 90% utilization. And that adds about 8 BCF per day of growth from 25 to 2030 and brings your rig count from an average of 249 rigs in August up to about 295 rigs. And ultimately, that kind of blows the crude oil story out of the water, where we see an already full Corpus route truly max out. We see the Houston-bound egress max out as well, leaving volumes to be pushed towards Cushing. Now, ultimately, those volumes won't get pushed towards Cushing. There needs to be certain pricing dynamics or certain dynamics within futures contracts and refineries that will draw more of an incremental barrel up to Cushing. So ultimately, without utilizing the Cushing route, you then see the Corpus and the Houston routes exceed 100% utilization, which ultimately is not really going to work out.
So does that mean expansion?
Possibly. I mean, there's maybe one on the table with Epic. I don't see that really happening in the near future. I mean, nobody wants to necessarily pay if they don't have to.
Julian, you brought something interesting up earlier. NGL pipes are overbuilt. So there is a possibility that maybe they look at that.
Yeah, that's right, Chris. I mean, with the overbuild we have in NGLs and the constraint we're seeing in liquids, we've seen these companies have the ability to switch between NGL and crude pipes very efficiently, and that would be a cheaper option than putting new steel in the ground.
Yeah, that'd be fun. The new Double H story.
New Double H.
Yeah.
So, I mean, the last thing that I want to touch on here is that this is a very kind of unlikely scenario for these the gas pipes to really reach 90% utilization. So we don't necessarily see this coming to fruition. The gas pipes will need to fill up. Warren will talk about that. But in the latest STIO that the EIA published, they're still very bearish on WTI pricing into the end of 26. And then ultimately, international demand is only going to grow about 2.2 million barrels a day from 24 to 26. And so ultimately, with the price sensitivities to WTI right now, I don't necessarily see that I don't see a good spot for U.S. shale to fit into that international growth.
And then there was talk like $50 WTI is really where we see some pain come into play. Do you agree with that?
Yes, and that's exactly what the EIA is forecasting right now.
Awesome. Thanks, Gage. All right, let's move over to the nat gas side of things. Oren, let's talk about leaving gas gains on the table. We have some massive projects that are getting FID'd here.
Yeah, thanks, Chris. So since we last spoke about the Permian, I think crude and natural gas outlooks have only diverged further. Like Gage said, we've had some spirited debates internally, and while he isn't quite as bearish on WTI as the EIA, he's certainly more bearish than me. For all the reasons he just outlined. But let me provide the counter argument. Since we last hit on the Permian in our July webinar, the overbuild has only increased in magnitude. And last month, we saw 2 new pipelines reach FID, adding another 4 BCF a day of capacity by late 2029. The first was Energy Transfer's Desert Southwest pipeline, which will probably run a similar route to El Paso Natural Gas South Main Line, carrying about 1.5 BCF a day from the Permian to Arizona, where we expect it'll primarily help serve a growing data center cluster in Maricopa County. This is something we've been calling for in our West Coast S&Ds for a while now, so it's nice to see that region finally balancing out. And it's worth noting that from between the time they announced the FID and their earnings call, ET had received enough inquiries about additional capacity that the CEO, Mackie McRae, talked about potentially doubling that capacity. It is a 42-inch line, so that is possible. And then in late August, ONEOK and the Matterhorn JV announced FID on another eastbound pipe, Eiger Express, which would twin Matterhorn, adding 2.5 BCF a day from Waha to Katy Hub. For eventual delivery to Gulf Coast LNG demand, likely both at Agua Dulce and in Louisiana. And so in total, expect to see about 9.5 BCF a day of incremental egress capacity out of the Permian by 2030, not including potential expansions on ET's Desert Southwest, Hugh Brinson, or the proposed Tallgrass's Permian to Rex connector, So this is all to say, I'm actually more confident now that Permian crude and gas are headed in opposite directions. And some questions I'm looking to answer are, which systems could we see this growth on? Is there processing capacity to handle this level of gas growth? And what sort of price action will we need to see gas-directed drilling in the Permian for the first time nearly a decade?
Yeah, thanks, Warren. If you've been following us, one of the themes we've had is you have to watch all 3 commodities to understand the market. And I think what I'm really interested in, Oren, I know you and Gage have these debates, but is there a scenario in the future where it's an associated crude discussion that we're having internally? I half jest, but it is something we talk about as the Permian becomes more of a gas, especially with this build you're talking about, gas basin. All right, let's jump into NGLs. And with NGLs, I know Julian Oren just talked about the high case, right, that we're looking at moving forward. And you're kind of you're working through the high case here of, hey, are we going to be able to grow into the NGLs, into this high production case? So why don't you talk about that?
Yeah, that's right, Chris. And what I'd say overall, the story for the Permian doesn't change between our base case and our high case. We still see plenty of NGL growth, and the high case is higher, but we still have enough infrastructure to accommodate that growth, no matter the case. What is really interesting, and kind of where we start to diverge in the Permian for NGL, is really looking at the 2 different subbasins, Delaware and the Midland, respectively. Really, the only issue with the high case, or the only constraint that we're seeing, is in the high case, the Delaware gas processing capacity does become constrained. This is late 27, kind of early 2028. So I think that's just kind of highlighting the difference that we're seeing between the Delaware and the Midland. As producers kind of shift toward gassier acreage, which is mostly found in the Delaware, we're going to see more need for gas processing and higher NGL levels coming out of the Delaware Basin as a whole.
Talk to me about processing because I'm just looking at timing. You're talking, this is the high case, but how long does it take to typically bring on processing capacity?
Yeah, so an average takes about 2 quarters, give or take a little bit of time to build on a new pipe or new gas processing plant.
Yeah, so we should probably think through as we start to hear this, maybe this high case comes true, or if we start to hear about it in early 27,
Yeah,
maybe we're looking at
and I
that.
think the last piece to that, Chris, Jackson's going to expand on this is in the Delaware where we're seeing kind of most of that gas and NGL growth. You do have to deal with the sour gas, and I think this is perfect exactly what Jackson's going to talk about.
Yeah, let's jump into sour gas, and it's interesting. I've heard about sour gas for a while, but 2 years ago, I don't know if it's St. James area, like they brought up sour gas, and now it is a topic we're getting questions on a lot. And Jackson, I know you're going to talk about this, but I think what people have to understand about it is there's a timing issue with sour gas and processing capacity that I don't know if we've quite solved yet.
Yeah, so a little background as thanks for that, Chris. As drilling pushes deeper into the Avalon and Bone Springs benches, associated gas is getting sour as they chase those higher IP rates. So on the Texas side, we're routinely seeing H2S or hydrogen sulfide, one of the components of sour gas that is extremely toxic, in the low thousands of parts per million with a meaningful tail of up 10,000 parts per million. So that's extremely toxic and needs to be handled. So this isn't a simple cryo processing story anymore. It's about full sour systems with amine treating paired with acid gas injection or AGI. So the true bottleneck is, like Julian said, processing can be added in quarters. AGI can't. These wells take 12 to 24 months to permit, drill, and commission through the EPA, and that's why. So the timeline creates the mode. So secured AGI capacity backed by long-dated dedications keeps upstream volumes sticky and their processing utilization high. So on the slide, the darker Texas counties on the map are higher H2S loads, precisely where disposal headroom is decisive. So the chart below underscores Salt Creek's G&P processing, which underscores the operating reality. As sour mix rises, systems without nearby AGI can't sustain the throughput and have to run below capacity. So 2 tailwinds are sharpening the incentives here. LNG power demand will call on a lot more Permian gas, as Oren has spoken to earlier. And then there's a little bit of sweetening the deal with these Section 45Q carbon credits that can enhance the returns.
So quick question. So you mentioned Salt Creek and the timing issue I want to get to. So and you brought this up earlier. So the wells, you have to do testing as you get deeper into the sour gas, you have to do testing. Could be a 2-year process to get these permits done, right? And so you're having to invest and almost trust the process, or you're not sure what's going on. I mean, what's the timing issue here we're talking about?
Yeah, I mean, the timing issue is just simply because these wells are Class 2 EPA wells, which means they have to be very secure and can't leak because hydrogen sulfide, or the H2S, is extremely toxic and can kill humans with very low parts per million. And that's the main issue, and that takes 12 to 24 months to get through all of those permitting processes, versus you can just add on an amine treating unit or cryoprocessing in a matter of quarters.
Gotcha. Well, I hope Salt Creek can figure that out. It seems like they're in a tough position right now.
Yeah.
Yep.
We also have, like you said, Salt Creek, and we also found Vaquero midstream have no disclosed AGI, and they're in that high H2S sour area. Producers midstream, however, is advancing AGI alongside, so they're a good private player that can expand and be another fold-in candidate in the Northern Delaware.
Great. Thanks for that. All right. We don't spend too much time here. We have our production tables. If you have questions on these, this month over month change by basin for crude, natural gas, and NGLs. We have a lot of complimentary content that we put out. So please sign up for those so you can keep up with what's going on. So as we like to close, I want to know what you're looking forward to watching over the next month or so prior to our next webinar in October. And Gage, you were thinking hard on this one. Did you have enough time to come up with something?
I can do this one.
Okay, good.
I'm interested to see, now that we've kind of seen Plains use some of its cash flow and also take out more debt, I'm interested to see where the remainder of that cash gets utilized within its business.
All right, that will be interesting. How much do they have?
With the debt, and then after the acquisition, and they're probably back to close to $3 billion. Again.
Okay. All right. Well, it's a lot to play with. That'll be interesting to watch. Thanks for that, Julian.
Yeah, Chris, what I'd be interested to watch is, as we kind of see this shift towards the Delaware and higher IP rates, what is really happening on the ground? What are the well data saying? What is the GR data saying? So really just interested in watching how the recent GPM data and GR data, because I know NGLs are growing. It's just kind of a matter of how much and how fast.
All right, good to see. All right, Jackson, I'm going to come to you last because you're a newbie. Oren, what are you watching for?
Well, the Permian stuff is definitely interesting. I think it's a little bit further out. Right now, all the rapidly changing things are more so in the Haynesville and over in Louisiana. I think Golden Pass is taking some small amounts of feed gas, and NG3 should be coming online anytime soon.
Great, Maria.
I think just want to see the Northeast in basin demand and how that will change our outlook, especially for like NGLs. That's what I will be looking for.
All right, Northeast in basin demand. Love it. All right, Jackson, last, your first time joining us. What are you looking forward to watching?
I'm really looking forward to watching for semi-annual reporting from the public companies. See what happens there.
Well, that'll be interesting. It'll be a lot harder to track, and I know you're looking forward to it. All right, everybody. Well, thank you for jumping on with us. We will talk to everybody next month.
Thank you.